Hello everyone, and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. First, a disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elite Wave analyst, having earned my Level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elite Wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, Fibonacci levels, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. So, these are the main topics that we are going to cover inside today's webinar. Okay, let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. Let's start with monthly GDP, month over month Canada, and then the next one is the non-farm employment change for the USA. Okay, what is Canada's GDP M over M? Well, this means month over month. In Canada, gross domestic product or GDP measures the monthly change in the total value of all goods and services produced within the economy compared to the previous month. This indicator provides a high frequency snapshot of country's economic performance and helps market participants gauge short term momentum. So the report is basically published by Statistics Canada. The report covers the major sectors such as manufacturing services, construction, energy, and more. Given Canada's reliance on commodities and exports, GDP figures are especially sensitive to global demand and fluctuations in resource prices like oil and gas. Now, a positive reading signals economic growth, while a negative print may indicate a slowdown. This data is critical for shaping expectations about future moves by the Bank of England. Now, on April 30th, 2025, the Canada's GDP month-over-month report came out with the actual number of 0.2. The forecast was 0.0%. The previous number was 0.4%. So the actual number is 0.2%, which is less than the previous number. Now, contrary to market expectations, For a flat reading, 0.0%, Canada's economy expanded by 0.2% in April, signaling modest but continued growth. This better than expected result helped ease concerns of a sharp slowdown, particularly after the prior month's strong 0.4% figure. Now, if you go over to a price chart, let me show you the USD-CAD chart over here. This is the daily time frame, and then we have the 1 hour chart. Let me zoom out a little bit. So following the GDP data release, USD-CAD moved lower, reflecting renewed strength in the Canadian economy. If I zoom out a little bit, I can easily show you a nice downtrend line over here, which is basically telling me that we still have a downtrend going on overall in USD-CAD. USD-CAD currency. It shows some signs of bottoming pattern over here, but still, it's still downtrend. So following the release, the USD-CAD moved lower, reflecting the new strength in the Canadian dollar. The upside surprise in GDP bolstered confidence in the economy's resilience and reduced immediate expectations of Bank of Canada rate cuts and interest rate. So the drop in USD-CAD was amplified as traders adjusted positions, pricing in a less dovish outlook for Canadian monetary policy. This movement also came amid a softer US dollar backdrop, adding further momentum to the pair's decline. So the overall analysis is that the April GDP report suggested the Canada's economy remained on a stable footing despite global headwinds. The data supports the Bank of Canada's cautious stance and could delay any discussion of near-term easing, especially if upcoming inflation data remains sticky. So, with growth holding up better than anticipated, the expectation was 0.0%, we got 0.2%. I know it's less than the previous 0.4% data, but still it's in positive territory. So the Canadian dollar may continue to find support, particularly against weaker peers or during US dollar pullbacks. The stronger than forecast GDP reading prompted a bearish move in USD-CAD, reinforcing market sentiment that Canada's economic outlook is more resilient than previously expected. As a result, the loonie gained traction, and traders will now look ahead to upcoming employment and inflation figures for further direction. So let's take a look at non-farm employment change. So the NFP report came out on May 2nd. The time is 12:30 p.m. UTC time. Let me talk a little bit about the NFP. What is non-farm employment change data report? Uh, this is sometimes also referred to as non-farm payroll data report as well, and it's a key US economic indicator that measures the change in the number of employed workers during the previous month, excluding farm workers, government employees, and those in non-profit organizations. The NFP report, released monthly by the US Bureau of Labor Statistics, the NFP report is a primary gauge of labor market health and significantly influences expectations for Federal Reserve's monetary policy. Now the previous number was 185K and the forecast was 138K, but the actual number we got is 177K. So the markets were bracing for a slowdown in job creation, with consensus forecasting calling for just 138K new jobs in April. However, the actual print came in stronger than expected at 1,777K. So this indicates the US labor market remains resilient despite the tighter financial conditions. Now let me show you the price chart of euro dollar currency pair. So we actually got a bearish price action in euro dollar currency pair following the release of the stronger than expected NFP data. Euro USD declined further as traders reacted to the robust jobs report by reinforcing expectations for a more hawkish Federal Reserve's stance. The upside surprise reduced the likelihood of near-term interest rate cuts and supported the US dollar across the board. The euro came under additional pressure as markets reassessed relative interest rate differentials favoring the dollar amid signs of continued labor market strength in the USA. So, my overall analysis is that the April NFP report reaffirmed the strength of US labor market with job creation far outpacing forecasts. Combined with stable wage growth and a steady unemployment rate, the data bolstered the case for the Fed to keep policy rates elevated for longer. With the Eurozone facing its own economic headwinds, the widening policy divergence further weighed on euro dollar, driving the pair to new short-term lows post-release. So the conclusion is the stronger than expected job numbers. The expectation was 138 and we got 177K number. So the expected job numbers sparkled a bearish move in Euro USD as the US dollar gained on renewed confidence in the American labor market. Going forward, traders will look to upcoming inflation and Fed commentary for confirmation of the policy trajectory. But for now, the dollar strength may continue to dominate the near term market trend. Next, let's talk about the euro dollar and British pound versus US dollar pairs. So if I go to a price chart of euro USD, I'm kind of expecting the market to top out over here because weekly time frame the RSI is overbought. The last time the RSI went above the 70 level, you can notice we got the top, and over here again we got the same story. So market is overbought at this point in time, but this is the weekly chart, so let's go over to a smaller time frame. Okay, in 1 hour time frame, you can see we got a nice downtrend going on. Okay, and as long as price action is staying inside this bearish trend channel, it's going to show us more weakness in Euro USD price action. Next, we have the GBP USD currency pair. The GBP USD currency pair if we go up here, let me show you the weekly chart first. Okay, we got a hit at 1.3429 level, and after testing this level, price action actually tried to drop. So if we go to a smaller time frame, like a 4 hour, maybe a 1 hour, you see market showed us a nice downtrend over here. But we need a breakdown in price action below the support level. What I mean by that is, if I show you, this is the level that I want to, here it is. So as long as price action is not breaking 1.3233 level, it still looks like to me an uptrend going on inside GBP/USD currency pair. However, if market tries to break lower, like if we get some kind of a bearish candlestick close below the old support level, then that would be a strong indication that GBP/USD is turning around and expect a top and more weakness in price action. Next, let's take a look at current week macroeconomic events and data releases. So this is the fundamental analysis for this week. So number one is the federal funds rate, and then we have the unemployment rate, Canada. Okay, so what is federal funds rate? The federal funds rate is the interest rate at which depository institutions lend reserve balances to other banks overnight. Set by the Federal Open Market Committee, the FOMC, this rate serves as the primary tool for implementing USA monetary policy and has broad influence over consumer and business borrowing costs, overall liquidity, and inflation. So the adjustments to the federal funds rate are aimed at balancing two primary mandates of the Federal Reserve: maximum employment, and the number two is the stable prices. The rate hike typically signal efforts to curb inflation, while rate cuts are intended to stimulate economic activity during downturns. Now, the federal fund rate decision the previous number was 4.5%. The forecast is also 4.5%. However, the actual data did not release yet. It is going to be released on May 7th. Today is May 6th. So markets widely expect the Fed to hold rates steady at 4.5%, maintaining a wait and see approach after a series of tightening measures in prior quarters. This decision would reflect a more cautious stance as inflation shows signs of easing, but labor market data, including the stronger than expected April NFP report, indicates the USA economy remains robust. So the impact that we expect, especially in the euro dollar, is if the Fed holds rate steady at 4.5%, then that's the hold in line with the expectations. And this may generate a muted response in euro dollar, especially if the Fed chair Powell reiterates a data dependent approach. However, any hint of future tightening could still support the US dollar. Now, if you take a look at a chart of euro dollar currency pair, the monthly looks quite overbought. And if you check out even the weekly chart, it seems to me uh, the euro dollar is probably going to drop over here. At least it might try to drop below 1.1203 level. If the Fed surprises with a hike, which is greater than 4.5%, this means it's a surprise rate increase, and that would likely spark a sharp rally in the dollar, pushing euro USD lower. As traders anticipate prolonged monetary tightening and higher returns on dollar dominated assets. And in case if the Fed surprises with a rate cut which is less than 4.5%, that rate cut would likely trigger broad US dollar weakness. And this means the euro dollar is going to rise up. It is going to boost the euro USD as investors adjust to a more dovish Fed stance amid shifting economic conditions. So, with inflation slowing down but economic data, including strong job growth, remaining firm, the Fed is expected to stay on pause, allowing more time to evaluate the lagged effects of prior hikes. Market participants will pay close attention to the FOMC statement and Jerome Powell's press conference for clues on future policy moves. So any dovish language could pressure the dollar and lift the euro USD, which is already overbought, while a hawkish tone, even without a rate hike, could cap gains in the euro or renew selling pressure. So until the decision is announced, the euro USD may trade cautiously, influenced by positioning ahead of the Fed's guidance, and it might go sideways. So once the outcome is known, the tone of the Fed's communication will be key to the next direction move in the pair. A reaffirmation of high for longer policy could weigh on the euro, while signs of dovishness might offer it a temporary reprieve. Next one is the unemployment rate, and that's related to Canada. So on May 9th, we are going to get that report. Now, what is unemployment rate? Canada's unemployment rate measures the percentage of the labor force that is jobless but actively seeking employment. Now, this unemployment rate released monthly by the Statistics Canada, it serves as a critical gauge of the nation's labor market health and broader economic momentum. The Bank of Canada uses this indicator to assess whether the economy is operating at or near full capacity. A falling unemployment rate typically signals strength in the job market, potentially supporting a tighter monetary policy stance. On the other hand, a rising rate may suggest economic slack and could increase the odds of rate cuts. Now, the previous number we got is 6.7%. The forecast is also 6.7%. The actual data didn't release yet. So markets are anticipating the Canadian unemployment rate to remain unchanged at 6.7%, reflecting a labor market that has cooled slightly in recent months. While the job market remains relatively stable, concerns over slowing consumer demand and external headwinds have kept expectations muted. So if you go over to a chart of USD CAD currency pair, there's a nice downtrend going on. If you check out the daily chart, the same story. I do expect kind of a bounce in market because price action is testing this old support area at 1.3817. So if the unemployment rate falls less than it falls below 6.7%, then it means a lower than expected unemployment rate would signal labor market strength, potentially reinforcing confidence in Canada's economic outlook. And this could support the Canadian dollar and push the USD CAD lower. If the rate matches expectations, like we get the same 6.7% number, then that is in line result and that may have limited market impact. And we might actually get some sideways price action over here. If the unemployment rate rises and we get a greater than 6.7% number, then it means a higher unemployment rate would point to growing slack in the labor market and may increase expectations for Bank of Canada policy easing. This would likely weigh on the CAD and lift the USD CAD in response. So my overall analysis is that with inflation moderating and the Bank of Canada treating carefully on interest rates, labor market data like the unemployment rate plays an increasingly important role in shaping policy expectations. A surprise in either direction could cause notable moves in USD CAD currency pair, especially if accompanied by shifts in forward guidance or economic sentiment. So until the report is released, USD CAD may trade sideways as markets await clarity on Canada's job market. Once the data comes out, any deviation from expectations could quickly shift sentiment, especially if it alters assumptions about the Bank of Canada's next move. Okay, next let's take a look at euro dollar, USD CAD, US dollar, Swiss franc, and spot gold. So let's start with euro dollar, and I'm going to show you the 1 hour chart. So far we're getting a bearish decline over here in euro USD currency pair, and it looks quite possible that price action is going to drop further to retest the lower boundary of the channel line, this bearish trend channel line. Next we have the USD CAD. The USD CAD actually, it just keep falling down. It looks bearish, and we might get further weakness in price action. However, if price action is going to break this trend line and we get this nice bullish breakout, if it happens, then obviously the next target area would be at 1.3903. So this looks promising. I mean, if everyone is watching the USD CAD bearish decline over here, but price action is testing the support at 1.3817. So this area might provide some aggressive buying and maybe a buying trading opportunity as well. Next one is the US dollar versus Swiss franc. Let's take a look at USD Swiss franc. So USD Swiss franc, last week I discussed that we could expect a bullish leg in price action. So overall we got one, and let me show you a smaller time frame of US dollar Swiss franc currency pair. In 4 hour time frame we got a breakout above this level at 0.8267, and the long-term support, I would say, or the major support is present at 0.8038 level. So it's quite possible that price action is just going to, move sideways and then rise up further in USD Swiss franc currency pair, because in weekly time frame we were expecting a bottom. This turns out to be some kind of a false breakout to the downside. So the minimum expectation was 0.8329, and if the euro dollar is going to drop further, breaking the support over here at 1.1257, then the chances are high that the USD Swiss franc is going to rise up from current levels. I would actually favor for long trades or buy trades if the USD Swiss franc is going to break above 0.8331 price level inside 4 hour time frame of US dollar versus Swiss franc currency pair. Next one is the spot gold. This is what I told last time, and I showed you guys that we are expecting a breakdown. That was the bearish triangle, which did work out quite nicely. Now, right now, the way I see, price action is trying to rise up over here in spot gold, and let me show you a nice trend channel which is supporting the bullish price action over here. We got this nice bullish trend channel inside spot gold. If you check out the long-term chart, market actually manages to break this bullish trend channel. So that's a break of a structure. It's possible that market might go up a little bit further and then tries to turn around and then drop further. So we will see how it goes. If it breaks this channel, especially the 1 hour channel, then the spot gold is obviously going to drop. Overall, it looks bullish. Okay, so that's pretty much it for today, and let me go back to the presentation. So what we have learned today, we discussed about the federal funds rate and the unemployment rate for the Canada, and then we also discussed about the euro dollar, USD CAD, USD Swiss franc, and spot gold. These are the assets to watch out for profits. What you should do next? Well, you can check out our social media pages. You can stay tuned for the schedule of next week's trading webinar. And if you want to learn about trading, visit a Trade Geek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, May 13th, 2025. So that's it for the time being from my side. Have a nice day and bye-bye.